Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. The focus has been on the ECB as market expectations of a rate cut in June get built up. But the German inflation yesterday, which came in at 2.8% for the month of April, which is slightly higher than the 2.7% consensus figure, and the 2.4% in March, has led to a rally in the German yields. On the domestic front, S&P Global Ratings retained India's sovereign rating but raised its outlook to positive from stable. Good morning, JK. How are you reading these developments?
Good morning. I think the last 24 hours has been quite eventful. Yes, there was news on India rating, there was news on German inflation. But what is standing out is that bonds have been put up for sale everywhere, starting with Australian inflation number yesterday, and the yields going up in Japan. Then higher than expected German inflation, and a very tepid response to 7-year bond issuance by US Treasury yesterday, following a similar response to 2-year Treasury the previous day. All have taken the US yields higher, 2-year almost touching 5% once again, and the 10-year yield going up by almost 17 basis points. So market really now nervous about the yields going further higher, because Fed officials have been holding on to higher for longer theme, and the German inflation coming higher could not have come at the right time, could not have come at the wrong time rather. So that's actually resulted in huge dollar strength, euro back near, in fact below 1.08 now, dollar yen no respite for the BOJ officials who are looking to contain its strength, but US yields going up actually works against their efforts. And then, of course, we have had the emerging market currencies. Now, again, Asian currencies are again back to their recent lows, like the Korean won, IDR, the Indonesian rupiah is once again at 2020 levels. So all these things have actually put pressure on the rupee as well. In fact, rupee, which failed to break 83, in the last attempt, has bounced. Rather, the dollar has bounced quite strongly, backed by strong buying by importers, oil companies, and then, of course, position adjustments ahead of weekend, election exit polls, followed by actual results, stock market falling, all these things. So the S&P action of changing the outlook outlook on India to positive. This is coming after 14 years. May have not come at the right time for the markets, because markets have been correcting and overwhelmed by the current situation of a election scenario, and then the dollar interest rates, and overall sentiment being negative in the global markets as well. Yes, the global rating agency did recognize sound economic fundamentals, robust growth momentum, and the government spending for their decisions. And in fact, they said that cautious fiscal and monetary policy could lead to an improvement in the ratings also. So just to note that it was only an improvement in the outlook, but not actually on the rating for India. But anyway, it's a very positive development for medium term, because that puts our borrowing costs in the global markets cheaper and also competitive. And then, of course, we might invite more foreign investments into India. So, in the last few days, we have very consistently clear recognition of India's growth and macro picture. S&P yesterday action was preceded by IMF upgrading India's growth for 2024 by 5 basis points, 6.8%. Fitch had already issued its statement that somewhere down the line, the rating may come up for a revision, upward revision, looking at the fiscal position, and also if the expenditure side is well contained. So I think India's macro picture, no one can deny how it has been improving steadily. So these developments augur very well for medium term for Indian markets and the Indian economy. But in the short term, unlikely that we will see a positive reaction from the rupee. In fact, the news came yesterday and rupee hardly reacted. Rupee still on the weaker side at 83.40. Where we go from here, looking at global markets, there might be some more sell-off in the Indian stocks, and then that could also put the sentiment on Indian rupee, keep the sentiment on the Indian rupee negative. A possible test of 83.45, but once it gets there, I think one becomes mindful of RBI's re-entering from the selling side. So we might be contained at 83.45.50 on the higher side, then slip into range mode ahead of the weekend outcome. So a lot of data ahead. US GDP growth today, India GDP growth data tomorrow, followed by PCE numbers as well. But in India, of course, focus will be on how the investors behave ahead of the weekend action. Yeah, that's it for the day. Thank you.
Thank you, JK. And of course, the yields have been going higher across, whether it is in US, Australia, Japan, or EU. Inflation has been a concern for every economy now, even the German inflation, which came in higher. When it comes to rupee, there has been rupee has been under pressure due to the global dollar strength, and of course, the imported demand. So the rupee has fallen quite sharply to trade above 83.35. And even globally, we are seeing currencies like Euro, INR, Euro dollar, which is trading below the 1.08 mark. So there is some sort of global dollar strength across. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.